So I have been a online student of yours for probably about 6 years. I'm not a part of any of your coaching programs, but I'm an avid watcher of your YouTube. I'm also a member of Wealth Nation. So you actually introduced me to them as well. I've been a member of them for about 5 years.
Not
And I originally started with Velocity Banking. Like I said, about 6 years ago, I was in a lot of debt and found your channel, was able to use personal lines of credit in order to get out of debt. And then I transitioned over to infinite banking for real estate investing and things like that. I am now back on a path of paying off some debt. Um, just, life's and debt kind of creeped back up again. So as of right now, I'm currently doing velocity banking and I think I have my numbers right. But as soon as I saw that you had this call today, I wanted to jump on the call with you and just get your opinion. I have a couple of goals. My number one goal is to pay off my current debt, which is mostly credit card debt. It's about 40,000. And then I have student loan debt, which is about 43,000, which I've kind of pushed to the side because I think eventually I'm going to use IBC to pay that off.
makes sense.
Maybe because the amount to loan from the IBC is about 1% higher than what the student loan debt currently is, just as it is. So goal one is to pay off that debt. And then goal two is then to start investing again in real estate. And then goal three is to save up money for a wedding, which I'll probably end up using my policies for that as well. But primarily, I just want to get your overall thought on my numbers, see if I'm in the right ballpark, if I'm doing things correctly. That's the main goal that I have.
Do you use my financial spreadsheet, or do you have your own that you use?
I have this 10 times crazy Excel spreadsheet that I use, but yes, in the same kind of concept as yours.
You wanna email it to me real quick? Do you have my email?
Um,
I can drop it in
let
there.
me
You mentioned we want to invest in real estate. So in terms of investing, real estate's our direction for that. That's where we're going to focus. Right now, though, we want to pay off debt and we're trying to turn back on velocity banking, is what I'm hearing, even though we're
correct.
already funding a life insurance policy. So there might be a world where both of these come together. That's what I can potentially do here.
Yeah, that's what I'm thinking. Um, so for some reason, it's not letting me share this. So make sure it has permissions. I'm gonna try and send this link to you. So I just sent it.
Yeah, you can just do the
Should
link
have
thing.
access.
Even if I'm just a viewer, it's fine. So did you start the policy in 2021?
I did. I actually have two policies.
Okay,
Yeah, my partner is going to be starting another policy coming up in the next few weeks as well. So we'll have three as a family.
got it. So you have two whole life policies on yourself, which
Yeah.
you able to give like a simple rundown, funding, company.
Yeah. So one is with Security Mutual. That is a 10,000 a year premium. But because I'm at year 4 or 5, I'm only paying roughly about $250 a month for that. Right now, the cash value is it's very little because I've used it to pay some real estate stuff. So right now, it's only maybe about $5,000 of cash value. It's about 400,000 of death benefits, and with paid up additions. Um, and then the second is Mass Mutual. It's a 20,000 a year policy, roughly about 750 death benefit, um, that also too, the cash value has been drained on that with real estate. There's only about $1,500 left in that one. So those are those two.
Cool. So we got loans on them as of right now.
Yes. And so I pay total for those two roughly about $2,400 a month for those outstanding loans. And you might see on that spreadsheet that I have there, I always include my policy loans and my savings and my expenses. And so there's a policy loan that you'll see on there that goes towards that.
The first tab tells me total income. Is that just you, or is that you and spouse?
That's me and spouse.
Okay, so all together, you guys are on the same page with these strategies, or is he
Absolutely.
like you handle it kind of thing?
Yeah, he totally lets me handle it. He trusts
Cool.
me with everything.
Nice. So 13K income, and we're saying that we spent about 12-ish, 13-ish.
I would say more at this point, more like 10-ish. You'll see the columns to the right, they're per month. So I've been paying down debt. So they're now more like 10, 11-ish expenses. And again, that includes savings and policy loans.
Yeah. So what you have been doing with the life insurance policies, the two of them, they're both pretty much fully loaned out. As you mentioned, there's only 1,500 cash value one, about 5,000 the other one.
Right.
And in terms of new dollars going into the policy, with Security Mutual, you're doing $250 a month, new dollars premium.
That's just for the premium, right?
Okay, so that's what, 3,000 a year? Okay.
Yeah.
And then Mass, we have the ability to do 20 in funding per year. What are we doing on that?
$833 a month.
So call it 10K, right?
Yeah.
Funding. Okay. And then you said 2,400 a month in loan repayment.
Yes.
Of that 2,400, how much is going to security? How much is going to Mass?
60% is going to Mass, 40% is going to security.
Okay. So we got 1,440.
Correction. I'm sorry. So I'll do some quick math right now.
Mm-hmm.
So to Mass, about 900 is going towards Mass.
Okay.
And the remaining and about 1,500 is going towards Security Mutual.
1,500. Okay. On the Velocity Banking side, what do we have as our debt tool? What are you using?
So I have that America's Credit EGID. I have a $10,000 personal line of credit that I'm doing the whole dump the income in, only take out expenses process.
So 10K is your limit?
Yes.
That's a PLOC?
Yes.
And your interest rate?
1099.
How long you've had that?
About 5 years.
Is 10K the max with America's Credit Union of Texas?
So I want to get more. The problem is that I no longer live in Texas. And in order to ask for an increase, they're going to ask for my address. And I'm currently in Florida.
Okay, so now we live in Florida.
Yeah.
Well, Florida is a phenomenal state. We got plenty of PLOCs here. Where are you?
Okay.
South Florida, North Florida, Central?
Tampa.
Tampa. Okay. We got plenty of options here.
Yeah, because that was going to be my next thing is like, should I get another PLOC here in Florida and see if what I can get? Yeah.
Sure, because you've had that PLOC for 5 years now. It's it's about that time. I've made videos where I tell people, once you've been doing Velocity Banking for a little while, don't forget you can always upgrade your tools. And so this is a prime example of us potentially upgrading our personal line of credit. So credit unions in Tampa, Florida that offer a personal credit revolving. Now, and I'll have to go through this spreadsheet thoroughly. I know there's a lot in here, but on the budget part where it says like housing, is that rent or is that a mortgage where you guys live?
That's rent.
Okay, it's rent. So we don't have a home. So that means PLOC is our way to go.
Right.
We do have properties though, right? You mentioned about real estate.
Mm, Well, the only property I have now is as a passive investor in multifamily, so I wouldn't be able to HELOC it.
Okay, got it. So let's take a look. Some banks. Who do you currently bank with in Florida?
So I have no credit unions
Okay,
that I'm banking with in Florida. All of
cool.
them are in Texas.
I know Florida has cheaper, or I've seen cheaper rates than Texas on the PLOCs. So here we got mid Florida. They go up to 50K with their PLOC. You don't know is the rate. Find out. It's not attractive. 14 and a half. So even though they have a high credit limit, you got a high rate. Not that attractive. It is cheaper than credit card debt, so you can also make that argument in terms of your specific case where we're trying to remove credit card debt. So you can
Yeah.
make the argument that that's not a terrible bank to consider. But we'll keep looking.
Yeah, and for the most part, I have I have moved over a lot of the current debt to lower interest rates just by moving it, maybe to another credit card that was offering like a 0% or like a 5% for a certain amount of time. So for the most part, I've been able to get either between 0 and 5, a lot of my debt down to 0 or 5.
Temporarily.
The only, yeah, I have one though that's still at like 16. So if I were to go with like that mid Florida that you mentioned, even that 14 would save 2%. So,
Well, Suncoast Credit Union was already coming in at 11 and a half with their interest rate, and they had the same max credit limit of 50K. So that immediately is more attractive.
okay.
Here we have Tampa Bay Federal line of credit, although we're not getting too much details. Let's see, 13. Okay. What is this? Florida Central. Here we go. 9.9.
Oh, that's nice.
Collateral. Loan start at 3. They don't tell us the max. So I would put this on our list.
Okay.
And remember, when we're doing velocity banking, 9.99 is not really 9.99. When we're actually doing velocity
Right.
banking, we can end up cutting the total percentage cost to like 7, 6, 5.
Right.
Central. And you have higher income, so I would prefer to have a personal line of credit that's higher than my income. So if I can get 15K, if I can get 20, like that's what I'm initially shooting for.
Okay.
But
Okay, that makes sense.
yeah, the Florida Credit Union is coming in as number 1. You will continue doing more research on that. See if you can find a bank 9.99%. Call Florida.
Okay.
Call Florida Credit Union, and we just need to know what their max credit line is on personal revolving unsecured line of credit. That's my first goal to solve, to get that PLOC where I can get anywhere from 15K and up. Then we're saying that we want to accelerate some credit card, but we already have life insurance policies in place. So what I usually tell clients that I work with is, hey, once you decide to turn this vehicle on life insurance and then you try to ignore that to do velocity banking on your debt, you're actually hurting yourself more in the long run, even though it take, say, longer to pay off your debt by flowing it through the policy. So a few tweaks that I would make here, and this is what I do with my numbers, my own finances in the current situation that I'm in, is right now you're sending money to pay back your loan on the policy, and then you're also somehow dedicating funds to velocity banking on the credit card. So what's happening is cash flow is going in 2 directions. That's what I see, right? If I'm in your shoes, I'm saying, you know what, I'm okay with paying the monthly minimum on all my external debts over here. Instead of me paying back my loans on my policy, I would rather max fund my policy. Because when you don't max fund, depending on the company, I know at Mass Mutual, I think we're okay. You can do what's called catch-up provisions. With Security Mutual, You have to reach out to Carmen and Darius or whoever the agent worked on your case, and you want to ask them with Security Mutual, what are my catch-up provision? When am I able to do a makeup contribution? Because
Right. For the paid up additions, like what's the max before a MEC?
per year.
Okay.
But also like, for example, when did you switch to doing 3,000 in funding as opposed to 10,000?
That switched November, because that's when the rider dropped off. Yep.
Oh, okay. So in your case, your policy is 10K per year for the first 4 years,
Right.
and then it drops to just
To 3.
just 3. So that is your max now, 3.
Correct.
Okay, I would verify that though. So just ask them if 3 is my max or not. If I have any additional PUA space or not. With math, 20K. What was the original design on that? 20K for.
It was going to be 20K for, I think it doesn't drop off until year 10.
Okay, so here's an up. So, and then with mass, was it the same thing that you switched to 10K funding last year?
Yes.
Okay, cool. So that was the beginning. All the other previous years, you did 20, 20, 20.
Correct.
Beautiful. So for 2024, the max we could pay in was 20, but we did 2025. We're getting another 20 that we can pay in. We're doing 10, I think. That's your case in this.
Yes.
So we've got 10,000 of unused mech space the previous year, and we have 10,000 of new mech space for the year that we're in. Possibly it might be just one set of 10K. Instead of doing $900 loan repay and $1,500 loan repay, me personally, would actually just redirect the $2,400 and fully fund my life insurance policy first.
Okay.
And then out of the 2 companies, whoever has the lower interest, I'm guessing is probably Matt.
Mm-hmm.
Typically have the lowest in the industry. But you'll verify that for me. I'm very tempted to do a velocity banking strategy. I might not even need it, honestly, where I'm going to simply max fund first, then pay down the loans, because I can recapitalize those dollars faster.
To pay off the debt?
Right.
Okay.
We could strategically do a potential chunk from the life insurance policy, then a chunk from the line of credit for whatever the policy couldn't do. And so let's just.
Yeah, I think you're thinking exactly how I was thinking it.
So we're on the.
Yeah.
Yeah.
We're on the same page. Yeah.
So you get what I'm saying, where maybe others in the room are like, what they're just speaking sign language right now.
Yeah. So I just want to recap. I want to make sure that I understand what you're saying. You're saying go ahead and max out the policies as much as I can, especially that Mass Mutual where I'm, not paying the extra 10. Max that out and then use that to, whatever that cash value then comes available. Use that to take care of the debt. And then whatever that doesn't take care of, use the personal line of credit to take care of the rest of it. Okay.
Yeah. Because me doing a chunk from line of credit to policy to pay loans down wouldn't be efficient. You're just creating more interest on the line of credit. We don't want to do that. I'm actually perfectly fine with paying whatever interest I pay in these policies, because I can mathematically show, hey, Tanya, look, over time, all that interest you paid eventually showed back up in your cash value in the form of dividends over time. So you're eventually going to create this offset.
Right.
But that offset can only occur if you're fully funding the policy to, upwards of its max. If you don't,
right,
then you're essentially, yes, you're paying the loan down, but you're hindering growth on max.
Right.
So that would be my tweak that I would make, where it's like, you know what, I'm fine with paying loan interest for the sake of max funding. Max fund first. It's not going to take me long to get to 10K. I have the cash flow to do that because I'm already paying into it differently. Once you do
and
that,
so you would say So you would say with that strategy to kind of stop paying those policy loans
Temporarily.
as well?
Temporarily.
Temporarily.
Yeah.
Okay.
Because by you sending your dollars to the loan, the cost of money, the cost of interest is so low that you're paying it down faster to then redeploy it to your 40,000 of credit card debt. You can make a
Right.
strong argument in that case. You can make a strong argument that yes, it makes more sense for me to send money to my bank, to my policy, than under normal circumstances where typically we would send our money to our highest cost of interest, which is your credit card debt.
Right.
So you're like, send it there because I'm going to pay less in interest and get these debts off, but at the expense of tax-free compound interest in the life insurance policy. What's the opportunity cost of that? That's
Right.
hard to measure, but if you can understand that that's really valuable on so many levels,
Right.
that and we could run the careful math to prove that you would be better off sending your dollars there than directly to your debt, and whatever interest you pay for now, we'll make up for it. Like we totally
Yeah.
will make up for it. And then your PLOC is like that extra boost.
The
Where it's
extra.
Like, where it's like, okay, the policies are fully funded. It's part of my expenses. I'm at a point where the funding went down, so I already fully funded it. It's just with the mass one, I don't want to miss out on the next 3-4 years of just doing 10K when I can bump that back up to 20.
Okay. Okay. That makes sense. Because I was basically doing it the opposite. I was like, oh, let me do velocity and then use the policy to subsidize whatever the velocity is not doing, but you're recommending to flip it
Flip it. Yeah.
because there's just more benefits on the flip side for the policy
Correct.
in general.
Correct.
Okay.
Yes.
Okay.
Yeah.
See, I knew I hopped on this call for a reason.
Oh yeah. It was meant to be. And so the action step coming out of this, while we're making those tweaks, you're gonna get the updates from Wealth Nation, and then you can share that with me. We'll do a call, and then we're gonna research banks. Start with Florida Credit Union, get that PLOC on our books. And here's the thing: even if it was a matter of just getting however much debt I can get into the policy without being fully maxed out, I always like to keep some available cash value in there. But if we're comfortable, fine, you can go a little bit higher on leverage. And then if you got a $20,000 line of credit, 9%, all your credit cards are at higher rates, even though you did mention some are on 0%. But you can time it when it's like, okay, when this expires, I'll just consolidate it in my line.
Yeah.
Keep paying my policies and then keep repaying the loan down. Once I create enough space, borrow out, chunk at my line of credit. So basically, I was minimizing my interest hit over here,
Right.
using velocity in that sense.
Got it.
That's where
Okay.
it's fun.
Thank you, Denzel.
Yes, happy to help there. Okay, I would like to do one more person. Tanya, that was good.
Yes, that was perfect. Thank you so much. I'm going to jump. So thank you so much.
Yeah. Enjoy the rest of your day.
You too.